So, in our last video, I broke down what happens when the government is printing money. And I basically created my own scenario where I said, in the country of me, I print $1 billion with the Federal Reserve and the central banking system. And so I showed you guys how, out of thin air, my country created 4.5 or $5 billion and distributed it amongst people. And then it finally ended up in its final state of being taxed by the government. So, in today's video, I just want to break down what happens if we were to stop printing money. Now, if you oppose the government and you completely hate the government, hate everything the government does, then this is something you'd probably want to do. Me personally, I wouldn't do it, but it's up to you. You can be a complete idiot and want to stop the government completely because you hate the government and whatnot. Because you think it's evil, but the government isn't that evil. It's a good system. But yeah, let's break down what happens if we were to stop printing money. Okay, let's go. So, step one. Federal Reserve has to say something, or the government and people in power has to say something like, oh yeah, they want us to stop printing money. We're going to stop printing money. Okay, let's stop printing money. So what that means is the dollar, it causes a deflation. Why? Because there's less distribution, and deflation means less money available, which means money increases in value. So it's kind of like a diamond. To me, diamonds don't matter to me. I don't really need diamonds. I don't need diamonds to live. But they're highly valuable. But I don't really care about diamonds. But they have value, so I'll take it. I won't spend it though, because not everybody has diamonds. If you had a rare coin, your first thought wouldn't be to spend that rare coin. Your thought would be to safeguard it because you know it's going to increase in value because nobody has that coin. And it's not being made anymore. So the availability of that coin is going to always decrease. Now, what that means is if it's less distribution and it's more valuable and it's less of it available, that means lower wages because your job, your boss, the business owner, the CEO, isn't accessing that much money. So, less spending by all, and money becomes scarce. Before, you may have thought money was scarce, but no, money is not scarce if we can print it. But if we're not printing it, it becomes scarce. Why? Because we're not making any. That is like, let's throw in an example, right? Let's say trees, right? You can say trees are scarce because a lot of trees are burning down. We're losing a lot of trees to climate change. It's not real. But we're losing a lot of trees to climate change, a lot of wildfires in Canada, right? It's becoming scarce. But in reality, we have a lot of trees. We can survive infinitely off these trees because we can grow them, a bunch of trees and whatnot. The quality of trees can decrease, sure, but the trees will always be available because we can plant them, and there's just so many around us. Why? Trees are not scarce. Same thing with money. Money is paper. So if we as long as we have trees, we're all good. But if we stop printing money and stop using paper to print money, money becomes scarce. Now, what does that mean? Let's go to the banks. If money is scarce, the banks have less money. So what does that mean? Less loans. You can't get a loan for your house. You can't get a loan for your business. You can't get a loan for your car. Oh, you wanted to spend $1,000 in your credit card? No, that's not the new norm. You can only spend $100 on your credit card, right? You have less limits. Low limits. You want to buy some new Jordan 4s? Sorry, you can't get that with a credit card. Save up on your debit card, buddy. If you can access that money, because they ain't got no money. So we had to loan less money. What does that mean? More interest. A lot of you guys love to use your credit cards for things that you can't afford. That means more interest for you. We're talking major jumps, man. We're not talking little jumps. We're talking about a mass deflation here. This is if we stop printing money completely. There's no money. So the banks are going to charge you so much interest that you go into higher debt. Now let's say you bought $200,000 house. That's like an average price in my area of Minnesota. You buy that house, oh boy. Remember, you're making less money. You ain't making much. You drop from an $80,000 salary to a $50,000 salary pre-tax. So if you got a $200,000 house and you're making almost poverty wage, what does that mean? You can't pay off your debt. Now, what does that mean? You got businesses, right? They gonna be in debt too, cause they ain't made much money. It's less money to distribute through people and human trade. So what does that mean? Businesses fail, bankruptcy. Your cookie shop, your famous cookie shop, failed in 3 years. You had good clientele. You just couldn't keep up with the debt that you paid to buy that property to sell your cookies. Then, what does that mean? Mass layoffs. You can't pay your employees, so you pay them less. That $50,000 salary just became $25,000 because your boss can't afford you. Now, what does that lead to? The government. Right. Remember when I said you make your $80,000 turns to $50,000 pre-tax? Yeah. Imagine what that is after taxes. Since the government doesn't have money, what do? They need to tax more money. So they take a bunch of your money. They're probably going to start taxing 20. California taxes like 18%, 15%. Imagine what they're going to be taxing if they ain't got much money. They're going to be taxing almost 20, 25%. That's a lot of money. You ain't going to have much. So what does that mean? They don't have much to fund your various things like your gender reassignment to your child. They don't have enough to afford to increase the schooling system and afford good teachers and whatnot. Harvard becomes a low-level college, and then the colleges that are lower level than Harvard, those become lower level as well. College becomes useless because the education there is buffoonery, like it is already. It's buffoonery information. What does that mean? More people are upset. You're upset. You people who are upset with the government right now, and you don't like the government, you hate the system that the government provides. Oh, you're going to hate it so much more because you can't get no funding for your weird interest. So, this is what we end up with. No inflation. I guess that's a good thing because inflation is the worst thing possible. I guess you would rather have a deflation, increase in value of the dollar, but a less ability of the dollar, less borrowing, high rates of interest. This is what you want. You want less money to be printed. This is what's gonna happen. Less borrowing. Nobody's gonna be able to get loans for their house. And then if they're able to get the house, they ain't gonna be able to afford that house for a long time. Money gains value, I guess. It turns into something like a diamond. But, like I said, you don't need diamonds to live. You need money to live. But if it's more valuable, it's more rare. And if it's more rare, not everybody's going to have it. What does that mean? More poverty. The gap becomes much wider. And then the federal government is limited. As much as you guys hate it, we need it. There's so many things that the federal government funds and gives to people so they can live cordially and at least have a chance at living in life. Disabled people wouldn't be able to get money if the federal government is limited. People wouldn't be able to get health care if the federal government is limited. So, what do we learn from this video, or these two videos here, is that we need money to be printed, and at the rate we're doing it now, it's okay. Like our interest rates are like could be like 2 or 3%, which isn't much if you think about it. And a lot of people will say, "Oh, this is really a bad thing. If we continue to print money and whatnot and do all this weird stuff with the money and inflation, the average cost, the average wage is gonna be like $1 million. Like, no way in hell we're gonna reach that. People like, if you think about it, if you look at the times over the past like 100 years, like the average wages increased like 50%. That isn't much. Not even over like 100 years. Over time in period, like in general, like we haven't been doing this long, like really long. Like by the time it realistically would the wage, like average wage would like get to like 6 figures or like 200K. Jesus will already be here, man. So you guys need to stop worrying about this. It's like climate change. By the time the sun explodes, who in hell thinks is gonna be here when the sun explodes? We all gonna be dead, man. We gonna be gone. We're not even gonna be here. But yeah, inflation is a good thing in this case. In this case, we don't want inflation. I mean, we don't want deflation. We would rather have inflation. So it's a game of weighing the best option. It's a game of trade-offs. This is why trade-offs is so important when you get into economics class, because you have to learn. Not everything is gonna have it. Like, yes, printing money has its cons, but when you weigh it against the cons of not printing money, you would rather be printing money. So it's important that you learn this stuff so you don't like grow up opposing the government completely and hating everything the government does, and then you're very ignorant of how good you have it in this government system and how good this government system is. So yeah, that's how the system works, guys. Yeah, goodbye. Next video comes soon.